Probably the biggest story that the biggest never-ending story seems to be inflation. And I want to talk about that. I know I've been talking about it quite a bit, and I'm talking about it quite a bit for a couple of reasons, and I'll break them down real quickly. First of all, it's a massive, massive problem with massive implications that affects every single one of us. I know for myself, I drive a truck, and it's gone up more than double to fill up my gas tank, which is not too good. Now, luckily for me, my commute is very short, just a couple miles. But I know that here in California, some people commute an hour each day or more, and that's a big thing. But it's not just gas. I mean, it's food, and so food and energy are the two things that we're really being affected by the most. And so this has massive implications. Now, for those that make less money, it affects them even more because the more you make, the less percentage of your total income is taken up by your food and energy. But if you're living kind of paycheck to paycheck, it's mostly just food and energy that you're buying, and it has an enormous effect on there. The other reason why I want to talk about it is because it's very misunderstood, and I think intentionally. I think it's intentionally, or I think you are being intentionally misled, so you don't understand what the situation is, so you don't place your anger into the right place. But as misunderstood as it might be, the leaders, the powers that be, the ones that are supposed to be driving the bus, they seem to not know anything about what's going on either. I got some clips I'm going to play from you about that. So we're going to look at this. I want to explain really what are the two main drivers of this. So we'll talk about that. Like I said, we'll talk about what's happened over the last couple of years that's really pushed us into this level that's just unsustainable. Talk about what this catalyst is that's really going to get the market to drop. Like I said, I have some clips I'm going to play from some of our elected leaders and non-elected leaders, what they're saying directly from their mouth. We'll look at ways that you can protect yourself from this, and then I have something that isn't too good, something that the head of the Federal Reserve is saying. And I think if you read through the words of what he's saying, it looks like it could get even worse. So I'm going to break all that down for you and more here as we're listening to the Mark Moss Show, talking about the decentralized revolution, talking about Bitcoin, talking about politics, finance, and technology. And again, talking about inflation, but giving you a whole different perspective on it. So the first thing is inflation is very difficult to understand for a bunch of different reasons. I'll make this pretty simple for you. I like to take these complex subjects and make them easy to understand. So it's difficult to understand because there's different definitions for it. So per the Austrian economics view, inflation is when the money supply increases. So you inflate the money supply, and then like prices going up, supply chains breaking down, that's the result of the money supply going up. In today's day and age, typically what we call inflation is prices going up. So asset price inflation or consumer price inflation. So the government reports this inflation number to us. It's over 8%. That's the CPI, Consumer Price Index. So they take a basket of goods, they measure that basket of goods, and they see how much those prices go up. The reason why that's a horrible way to look at it is because my basket of goods is different than your basket of goods. Certain things, like if you're trying to buy a house in Austin, Texas, or on the beach in Miami or in Southern California, inflation on your home purchase is going to be way different than your home inflation would be in Indianapolis or in Kansas City. So it affects us all differently. Also, you may not be trying to buy a home. And maybe I am. You may not be trying to go to college or pay for medical care. Maybe I am. So certain things like Netflix and Netflix and pizza, those things haven't gone up very much. And if you're not paying for rent, living with your parents, watching Netflix, eating pizza, inflation doesn't really bother you. But if you're buying a home on the beach in Miami and you're trying to send your daughter to college, then you have medical bills, then inflation's hitting you really, really hard. So you understand inflation is different all over the place, and it affects us all differently. So that's why it's a horrible way to look at it. And then why do prices go up? Well, there's a trillion reasons why prices would go up. And so that's why we look at the increase of the money supply causes all types of distortions that cause prices to go up. Now, the powers that be, again, want to intentionally mislead you. And they talk about them in really two main ways. And really there's four main drivers. And so you might hear about these. So one of them is called cost push. Cost push. So cost push inflation is the decrease in the aggregate supply of goods and services stemming from an increase in the cost of production. All right. So first of all, I'm going to give you these four drivers, but just put this in your head first. All prices drive off of supply and demand. If there's more supply than there is demand, prices come down. If there's more demand than there is supply, prices go up. So these are reasons why supply and demand would be affected. So cost push. So when the price of goods go up, when commodities go up, when shipping prices go up, when less people are working and companies raise their prices, when costs go up, then those high prices get passed on to you, which the cost of production going up increases the price you're going to pay. Cost push. Okay, makes sense. It's kind of stupid to explain it maybe. And the second one is called demand pull. And the demand pull is the increase in aggregate demand categorized by 4 sections of the macroeconomy: households, business, government, and foreign buyers. I think it's ridiculous to break it down like this, but demand pull. So when there's extra demand, when there's more demand, there is supply, prices go up. I mean, it's ridiculous to have to break this down, but this is how the government breaks it down, and I think it's intentionally meant to confuse you. Now, there's 2 other contributing factors to inflation that include, 1, an increase in the money supply of an economy, and 2, a decrease in the demand for the money. So an increase in the money supply of the economy. So when you increase the money supply, now you have more money chasing the same amount of goods. So that's demand pull. So they increase the money. All that money creates more demand, and it pulls the prices higher. So what we've seen is kind of 2 things. So they want to blame it on the supply chains breaking down, for example. So the supply chains break down. Less people are working today, for example. They have to pay people more to get them to come to work. So that's cost push. That's pushing the expenses up. It's cost pushing the prices up. But it also, why is supply chains breaking down? Well, because in the United States, we're ordering about 20% more products than we were before. Why? Why are we ordering 20% more products? Because there's so much money, which has increased the demand. So the demand is pulling the prices up, and the cost is also pushing prices up at the same time. Again, just understand supply and demand. So we have a massive food inflation, not just in the United States, all over the world. So why are food prices going up? Because we don't have enough food. Energy prices are going up. Why? Well, we don't have enough energy. But there's also other reasons. I'm not going to dig super deep into them. It's probably for my next show. But there's also reasons why energy prices are going up, and that's cost push. So regulations that are being imposed on farmers growing food or on energy companies getting that food out, the energy out, pushes the prices up, plus the demand. So there's different factors. But the reason why I wanted to break this down to you first is because this demand pull piece, I'm going to circle back to it at the end. And once I tell you what these people are saying, it's going to make sense. So that's why I want to set that up for you before we get into that.